Alibaba. I've been negative on Chinese stocks for 5 years, but that changes now. Baba. I just started a position in Baba in the public count here today. 90 shares, and they've been uninvestable until now. The bottom line is, in regards to Baba, the past 5 years, just been a don't touch, don't own Baba. I believe the next 5 years is going to be a must-own Baba. The shutdowns in China, in everything like that, it was a don't own. That's over the past 5 years. That's not what's going to happen over the next 5 years. I think the stocks, I wouldn't be surprised if this outperforms the market significantly over the next 5 years, and I mean significantly.
My best stocks and my worst stock in 2023, but that's all about to change. 2023 has come to an end. The stocks that I actually talk about on this channel, some of them did great. Exceeded my expectations, like the Honest Company. For a money-losing small cap, I am shocked. It has went up over 200% ever since people from Jeremy's private stock group sold out following him at the end of October and November. Honest was my best performing stock simply because I have averaged my cost basis down to $1.8 a share after Jeremy sold and pushed down the price a lot.
Well, holy smokers, folks, this ain't no dang joke, as I just put $83,000 into a stock today. Yes, one stock I'm extremely excited about, okay? This stock, I would call it a an extremely low risk stock. And I mean extremely low risk. Now, my riskiest stock I hold, this one's the most frustrating of the bunch, okay? It is. It's no doubt this is the most frustrating one, because here's the deal. This one should be among my safest stocks. It should be. But instead, it's my number one riskiest stock I hold in the entire stock market. Second reason is there's a low probability, in my opinion, there's going to be any major drop in this stock lower. It's shocking. It's shocking how mismanaged this company has been, okay? The most frustrating stock I hold by a mile. It's not even close. This and the Chef are the only two stocks I can really think of off top of my head. They're those sorts of stocks that I'm like, I've got a fully built out. And by the way, the Chef is a fully built out position for me now, meaning if the Chef was to go down, I would also add to that one. But if it just starts going up from here, I'm happy with what I hold, because I think it's a high probability it's going to start to be a beast in 22 and beyond, okay? Used to be the Chef. This is my new, most frustrating stock, okay? Very, very, very little risk in this one. So, the stock I went ahead and bought $83,000 plus of here today, and we're going to get into this a little deeper here, is Honest Company. I bought 11,111 shares of HNST today at $7.48. And I think this stock, is going to 3x. I think it's going to be a $21 plus stock in a matter of within the next 2 years, essentially, okay? And this stock is Honest, and honestly has been so frustrating to deal with.
As for Jeremy selling Honest shares,
he's the worst of the worst. The Planet, Honest, Avant. Of these three stocks, the worst one has been Honest, certainly. They've been the worst performer. So, I sold some Honest recently. Will I sell more if I don't like what I see from Honest in that next quarter? I might sell. And I might take the L on that one. I just sold out of a stock completely in the public account. The stock I sold is Honest. So Honest is the stock I sold here today in the public account. I held still 28,000 shares of Honest in that portfolio overall. Okay, that she was taking down Christmas lights. Okay, I don't know if that was pre-recorded or if she was actually taking down Christmas lights at 3:30 on an afternoon on Monday, but that was extremely frustrating.
I learned so much. I
gotta say, I was actually pleasantly surprised. And the stock is Honest. It's up 12.5% after hours. Like, come on, man. It's definitely in the penalty box. I will pull the plug and I will sell out the rest of my shares of this stock.
Come on, man.
It shows how much his words really carry. I will explain it all right after this.
How you like that?
So I am up 90% on the Honest Company, and I have fully built out that position. My worst performing stock is actually my Baba stock. Still down 2% till this day.
Here's the deal. Stock's trading at about 7.5 times next year's expected numbers. And I'm looking at a stock that has, let's call it revenue growth of 9 to 10% likely next year. Oh my gosh, okay. China and the US were becoming friends again. It's very obvious to me that the situation is getting better rather than worse. Learnings that Alibaba's seen from some of these, let's call it little faster moving, quick companies that have, kind of expanded the market. And I think Alibaba's been able to look out there, and I think they're going to be able to replicate a lot of what the other Chinese e-commerce players have been doing. And that's going to bode very well for Alibaba. It's kind of like Meta. Meta lets other people innovate, and then they copy that, and then they just grow like crazy, right? They're just phenomenal at that, and Alibaba can do the same exact thing. But could I put $50,000 in the stock, $100,000 in the stock? Yeah, I think Baba will do very well over the next few years.
My SQ Square block stock is up more than 60%. Estee Lauder is up 30%. Not too bad. We are at the end of the year, and so far the S&P 500 is up 24%. So I'm sure that some of you have got positive gains in your portfolio. Some of you could even be beating the S&P by a wide margin, but some of you may have missed out on those gains if you may have stayed in cash and have gotten much lower returns. Michael Burry may have shortened the market and got a negative returns. But the most important thing is not how much you made this year. Although, yeah, that's important. But I think the most important thing is, what did you learn? What did you learn about yourself? Because that's even more important, because that will determine your returns for the future years. Remember that success comes from having good judgment, but good judgment comes from having experience, and experience comes from having previous bad judgments that you learned from. But if you have got bad judgments in the past that you don't learn from, and you don't take ownership of those bad judgments, and you blame everyone else, you blame your luck, you blame God, you blame the market, or you blame the guru, then you don't learn anything. But if you take responsibility and ask yourself this question, what can I learn from it, and how can I make me better investor and a better trader, then that leads to experience, and experience leads to future good judgments in the years to come. And that will lead to even greater success in the years ahead. All right? What are my main takeaways for 2023? But I do hope that you will share what are your lessons as well in the comment section below. I would love to hear what you have to say as well. I think some of the most important lessons to take away for this year, lesson number 1, I'm sure you guys would have seen this coming. I've said this many, many times, but I have to reinforce it again because such an important lesson. Number 1 is don't ever listen to the predictions of the economists and the YouTubers, so-called analysts and market experts at the end of last year and the beginning of this year. And the majority of economists called for a recession this year, and the majority of the market experts called for another crash. Or they just said it's a bear market rally, right? So I am sure you've seen this end of last year. If I don't listen to these experts, these economists, these analysts, then who do I listen to? The answer is no one. Don't listen to anyone. Instead, follow your own investment plan if you are an investor. And if you are a short-term trader, follow your trading plan. So for example, as an investor, you got to have a plan, like my plan as an investor is to only buy fundamentally great companies that have a moat, that have consistent growth in revenue, profits, and free cash flow companies, that have got high return on invested capital companies, that have got conservative debt companies, that have got a sustainable competitive advantage. So I identify these companies every single year, and once I calculate the intrinsic value, I know what the shares are worth. And once the price is below that intrinsic value, and at the support level, I just add shares, and that's all I do. So my decision to buy shares of a good company have got nothing to do with any kind of market or economic predictions. It's got to do with, is it a good company? Is it undervalued? Has it retraced to a technical support level? If it is, I just add shares because I know that if I do, that over time, the shares of the company will be getting a lot higher over time. I see a double bottom pattern. Once I see those entry signals, I enter with a long trade. And of course, in trading, you can't win all the time. You got winning trades, you have losing trades. That's trading. You win a lot more when you win, and you lose a lot less when you lose. That's all about the risk to reward ratios, and by following the trading plan, I generate consistent profits in my trades. By following my investment plan, I build my wealth consistently over time. It's got nothing to do with predictions, so remember, follow your investment plan, follow your trading plan, your predetermined entry rules, exit rules, risk management rules, and do not follow any kind of predictions, no matter who gives those predictions. Even me, if I give you a prediction, ignore me. Follow your investment and trading plan. I can tell you that even when I make predictions, I don't follow my own predictions. I just follow my investment and trading plan. I just make predictions for entertainment purposes. So that's lesson number 1. Lesson number 2, don't argue with the market. Follow the price action of the market. Follow the trend. So whether you are an investor or trader, same thing, especially if you are a trader. If you're a trader, when do you want to go long? When is on an uptrend, you want to go long. You don't want to fight the trend. You don't want to go against the wind, all right? If it's on a downtrend, then you go short. You always follow the trend. Now, as an investor, of course, the trends are not as important, but important as well. So, for example, as an investor, if you find a great company and it's undervalued, but it's still on a downtrend, you may want to wait before adding shares. Wait for the downtrend to show signs of a reversal, like a double bottom pattern, or oversold pattern, right? Or wait for the downtrend to consolidate. And then you buy during the consolidation process at the support levels below the uptrend resumes, or you could wait for the downtrend to confirm into an uptrend before you enter. So again, whether you're an investor or a trader, you got to use the trends and the reversals to make smart decisions. So as for the Honest Company, Jeremy sold all of his Honest shares when it was at $1. And that is when I loaded the boat. And now it is at $3. Did you hear me? The Honest Company is at $3 a share. Jeremy, you're probably sorry about making that decision. At $1, it formed the base. And I saw the insiders buying shares. So I kept buying the dip. But next year could be different. All of these gains is about to change. You are such a good boy for watching my video right till the end.